Okay, guys, welcome to Libertas Trading and welcome to the ADP preview for the 5th of November 2025. Now, this one could be quite interesting today. So, this year, ADP is coming more into focus. We've seen some nice moves out of the data. So, I've had three really nice trades this year off ADP. So, basically, why is that? It's because NFP's credibility has come into question. So, markets have had to find other data points to focus on to find out where the labour market's going. And ADP's taken the shine, basically. Also, as we spoke about in the ISM manufacturing preview and also the week ahead preview, because of the government shutdown, we've had no jolt for the last 2 months. We've had no claims for the last 5 or 6 weeks. And also, most importantly, we didn't get NFP last month and we're not getting it this month either. So basically, the markets and the Fed are sort of running blind on where the labour market is in the US at the moment. So Jay Powell actually likened this situation in the FOMC meeting to driving in the fog and said the Fed are now drawing on alternative data points for insights into the labour market. So all of this, coupled with the fact that financial analysts all over are calling for the data to be quite market moving, and I've heard a lot of people say that we should get an overreaction to this ADP number today, that means we should get a really good reaction. However, there's one thing put me off, and it's quite a biggie for me, and that's last month's print. So let's quickly have a look at last month's reaction. So this is the reaction on the euro. We printed minus 32k, which is huge. It was 82k below the consensus. It was 55k below the minimum expectations, and the revisions were absolutely massive. What's that? 57k minus revisions. And look at the reaction. Yeah, we had a nice move higher, but it only lasted 4 minutes and we ended up completely reversing. If we have a look at some other charts on the 1 minute, dollar yen was exactly the same picture. In fact, it was a little bit worse. We peaked at 3 minutes and then completely reversed. And then looking at stocks, stocks was even worse here. We moved lower on the bad print and reversed within sort of about 10 minutes. Now, just whilst we're on the subject of stocks, I've heard a few people online, not many, but a few, question the reaction function of equities to today's print. So just to quickly tell you my opinion. So I think bad print is bad for equities. Of course, it's going to increase rate cut expectations, which will be good for stock markets. But I just don't think that a lower jobs market is good for equities at the moment. And just to prove that, we had last month's reaction, which moved briefly lower. This was the print in July, which, moved lower, yet retraced a little bit, but then we moved lower again on a really bad print. We've also got June's print, which came in really weak again. And we had a nice reaction lower in equities. And then this was a print from April where we had a move lower in ADP below the minimum and massively below the consensus. And we pushed lower. This is a bit exaggerated because we had a massive miss in quarterly GDP at 1:30. But you can see in that first 15 minutes, bad reaction in ADP, bad reaction in equities. So in my opinion, the reaction function for equities is worse labour market, equities down, better labour market, equities up. Now, for me personally, I think there could be a chance of a more medium-term move on the back of this. It is more highlighted. This data is being heavily scrutinized. So, we could get an opportunity of a really nice move here. However, past reactions have said that ADP doesn't last for very long. So I am probably, depending on the reaction, I'm probably going to be scalping this one and getting out within the first sort of 4 or 5 minutes. However, if the print is absolutely huge, I may take some off the table, move stops to break even and hold for a bit longer. But if we just have some quick look at the past reactions here, just to sort of see how the market's reacted. So, this was back in September. So this was September's print in October, sorry. The reactions were quite brief, lasted about 4 or 5 minutes. This was the June print in July the 2nd, which again, lasted about 10 minutes and then it didn't completely reverse, but it may as well have completely reversed. So again, the peak here was about 10 minutes long. This was on the euro on the 1 minute chart. Then go into June's print. Again, we moved up. This is the 1 minute chart. So we peaked at about 10 minutes. We reversed halfway. So I actually got filled here. So we reversed almost towards where my fill was. We meandered around a bit. And then when ISM services came in weak, we pushed higher. And then just looking at the April print, again, another bad print. We pushed higher. We peaked within about 7-8 minutes, and then we completely reversed. I think from memory, we had some data come out at 1:30. I can't remember now. But anyway, wasn't the best reaction. So I wouldn't blame anyone for holding this more medium term. Maybe looking for some dollar longs or something like that, or maybe some equity downside, or if you want to trade gold, I wouldn't blame you for doing that. But just based on past reactions, I'll be keeping this one nice and tight, and I'll be keeping risk down, and I'll be keeping positions short. So let's have a little look at the trade scenario plan. So I'll be looking at minus 33k or lower for a dovish reaction, which would be below the prior of minus 32k. It would be below the minimum of minus 20k, and it'd also be the lowest since March 2023. So below minus 53k would be the lowest since June 2020. And you can imagine financial media kicking off about that one, you know, lows and 5-year lows on ADP. So that could be quite nice if we do print below minus 53k. And then for a hawkish reaction, I'd be looking at 105k or higher, which would be well above the prior. It would be above the max expectations as well. And it would be the highest since March 2025. Now, these numbers may look a bit like a bit far-fetched or a bit of a far reach, but as I said, based on past reactions, based on the disappointing reactions I've seen from prints, you know, almost as surprising as these two, that's the reason I'm looking for quite a large beat. So obviously here we're, what's that, 528, 77k above the consensus, but I believe that, you know, if I'm risking a large amount of money on this, I want to make sure that we're coming in nice and high. So these are the numbers that I'll be looking for personally. Just looking at previous ADP data prints just to see that this isn't so far-fetched. Here are some of the past reactions. So we had minus 82k from consensus last month, minus 128k from consensus in July. Is that meant to be July? Yeah, July the 2nd. Minus 73k in June. You know, so we do get some massive deviations in ADP. And as you can see from these NA, these are times when it didn't move markets. So here we printed 40k above and markets didn't do much. We really do need some massive prints, in my opinion, to get a tradable reaction. So now let's have a look at the scenarios. So expected reactions. For a dovish reaction, I'm expecting dollar down, US yields down. I'm expecting stocks to go down, as we spoke about. And I'm also expecting gold up. But based on last month's reaction, which was dreadful, I won't be trading gold on this one. So we'll just quickly go into that. So here's the 2-minute chart on gold. And this candle here at 1:15 was the 2-minute reaction as ADP come in very, very, very weak. We saw gold push up and then completely reverse and then some. So, you know, if anyone wants to trade gold, carry on. But personally, just based on last month's reaction, I'll be sitting this one out. And then conversely, for a hawkish reaction, we're expecting dollar up, US yields up, stocks up, and then gold down. But as I said, due to last month's reaction, I'll be sitting a gold trade out. So for medium-term plays, we've got ISM at 3 o'clock UK time, which is an hour and 45 minutes after ADP. So that's obviously a risk. Obviously, if ADP comes in really hot, it could be nice to get into some ISM or some dollar longs for that as well. But, you know, just personally, because of this risk and because of past reactions, I'll be skipping medium-term plays. But just looking at what I would trade if there was some medium-term plays. So I think for a dovish print, dollar yen shorts could be quite nice. There's not really a currency that I'd rather buy over the dollar at the moment, but the yen is probably I think the yen's the strongest on the day at time of recording. We've had yield differentials that point to the downside in the pair. We're up at the 155 level, which is pretty important. And recent jawboning from Bank of Japan officials and currency diplomats could keep yen sellers at bay. So obviously worries about yen intervention. Also risk off should help the pair. So just quickly looking at the US dollar Japanese yen chart. So here we are at this 155 level. We've found some quite nice resistance up there from this previous high in February. And it looks like we're sort of meandering around here. So if we do get a massive miss, a push lower could be quite nice on that one. And then for a hawkish print, cable shorts, which is everyone knows is my favorite currency to sell, is the pound. So we've had weak pound inflation 2 weeks ago. Last week, we had the BRC shop price index come in very, very low. We've got the upcoming budget, which is suspected to be negative for the UK economy. We've got stagflation risks. We've got low growth. We've got a weak labour market. And we've just broken below a massive support level in the pound US dollar. So let's quickly have a look at that chart. So here's cable, and then look at that sort of that 130 level. We smashed through that. We've smashed through that moving average, which I think that's the 100-day. No, that's the 200-day, I think. We smashed through that. And now we're sort of around this 130 level. So a break below that, you're sort of looking at lows at maybe 127 if you wanted to hold that long. But I think this one looks quite nice. We've also got the Bank of England coming up tomorrow, which we could get a nice dovish surprise from there. So that's obviously a risk, but that could also add to cable downside as well. And then also on a hawkish print, I'd be looking at Aussie US dollar shorts. So with the Aussie dollar, even with very hot quarterly inflation, we've had US-China trade relations coming down a little bit more, and we've had a more hawkish than expected RBA. The Aussie can't seem to catch a break at the moment. Of course, the risk sentiment's been lower as well, which hasn't helped. But I just feel that like with all these positive impulses into the Aussie, seeing such lackluster price action for me is indicative of future downside for the Aussie. So I think Aussie US dollar shorts could be quite nice on a hawkish print. So we'll quickly look at the Aussie index. So this is an equal weighted Aussie index. And as you can see here, we've had a bit of upside, we've had a bit of downside. Price hasn't moved much in the last month. So we've had so many positive drivers for the Aussie in the last sort of 6 weeks, and we've not really moved anywhere. So I'd be quite looking forward to, or quite excited about selling the Aussie US dollar at these levels. Just quickly going on to the Aussie chart. Here we go. So yeah, there's nothing really special about this level. Maybe you'd want to look at taking profits at this 64 cent level. Maybe we get a break below that. So, there is quite a bit of support and resistance around here. So that could be something to be mindful of, but I think downside in this pair looks quite nice. And then for my preferred play for today would be a scalping play. So depending on what's the strongest at the time of trading, of course. So the last 4 tradable prints, it hasn't mattered too much if we entered straight away or waited for 30 seconds. But due to the nature of this print today and the potential overreaction, I'll be getting nice and sharpish. Of course, looking to sell a pair if we're looking at getting in sharp, looking to sell a pair over buying a pair. So for the dollar yen, I'll be looking at a 25 pip target. For the euro US dollar, I'll be looking at a 15 pip target. And for equities, for the SPX, I'll be looking at a 6-point target. I won't be trading this one because the last 2 reactions have been pretty messy. So I'll be sticking to dollar yen and euro US dollar, depending on how the euro yen's trading on the day or just before the print. So that's my plan for ADP. Good luck, and any questions, just give me a shout.